Hey everybody, welcome back. My name is Mike Fairborn. It's great to have you here for our swing trading class. Been looking forward to our discussion. Plenty of stocks out there that are showing flag type patterns. And so we want to look at those today. Those are really part of much of what we talk about within our swing trade class, amongst other sorts of price patterns and setups. Also wanted to look too today at the Arun oscillator, the Arun indicator again. Talked about that last week in my ThinkScript class where we did review specifically a scan on how to find the highest values for the Arun, kind of like we looked at last week, but a good quick way for you guys to tap into those. We had some interesting results with that Arun last week that we'll talk about here today, but would love to welcome you all back. Great to see you folks. Hello to you, Jim. We've got Will. Excellent, Will. We've got Paul, Jay Richardson. Nia, we've got Ocean Life, Miami, Riceburg, Jim Doyle, and others. Great to have you on board, folks. You can follow Cam and I on X, Cameron May CS, Mike Fairborn CS. Love to have you on board. If you're not already following us on X, I think many of you are. It's great to have you there. All right, well, with that, let's go ahead and dive on into our discussion. Excited to get going and taking a look at what is out there, what's looking interesting, perhaps the way the number of traders might be looking at it through the lens of momentum and other indications. So with that, our disclosures. Information here is for general information purposes only. It should not be considered an individualized recommendation or endorsement of any particular security chart pattern or investment strategy. Now, options do carry a high level of risk. They're not suitable for all investors. Okay. Specific securities used to demonstrate analysis of trading functionality selected randomly. We did look at a number of different details there. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. ITM option has a higher risk of being assigned early. More on that in just a moment. Schwab does not recommend the use of technical analysis as sole means of investment research. Paper money software application for educational purposes only. Investing does involve risk, including the loss of principal. There is no guarantee that the execution of a stop order will be at or near the stop price, and past performance is no guarantee of future results. Dividends are not guaranteed. We do get into dividends every once in a while. And by the way, there is also quick disclosure here on futures and futures options. We do look at the charts. We do not trade futures in this class, but we do reference the charts. So we wanted to throw out some disclosure items there, right there for you, just for you guys. All right. Well, let's go ahead and just do a quick review of what we look at in this class. If you are new, first of all, let us know in the chat so we can welcome you. Hello to you. Hello to all of the followers that we get each and every week. It's great to see you all once again. All right, folks, we do talk about trades in this class where we're really just trying to pick up on the big portion of the moves here. We're looking at an extended trend, and within that trend, after the pullback has occurred, we're simply just looking for these pullbacks, and then our interest really centers around the follow-through. That is the swing trade time frame. That swing trade time frame generally, not in all cases, we have gone a little bit longer, and believe it or not, with the stock that we had last week, we went shorter too. Now that can also mean a quick stop, or it can mean a quick target. The quick stops are generally a lot more common than the quick targets, but we'll see what happened with our results from last week. 3 to 14 days oftentimes is what we'll be shooting for. In terms of counting the days on these runs, 3 to 14 days, we're really just looking for that key area of momentum that can trigger. So we look for signs in this class. We use a number of different indicators to help us. If you'll notice right here too, we're really kind of using the structure of a flag pattern. If you haven't seen it before, well, you're seeing it right now. It's right there in front of you. Believe me, I know many of you have seen that flag because we talk about it each and every week. That's what you get if you come each and every week. You'll see, some trade examples that we have, as well as a discussion, particularly on swing trading. That's a flag pattern. You can see up top here. Yeah. Hey, bull flags. We talk about bull flags quite frequently. We talk about a lot of different patterns, but a lot of the indicators that we discuss and sort of trade setups will happen towards the end, the perceived end. Okay, there's no guarantees, but the perceived end of a flag pattern. So we like to try to look and try to find those areas right there for a good reason, because what resides right after is a possible move to the upside. Now, we do look at downward moves as well. We generally will do this when the market isn't showing so much strength. There's generally almost always a bull market somewhere, almost always a bear market somewhere, but we're taking a look and really tapping into what's happening in the market to help us kind of determine which side we might be looking at more frequently. Now, I'm coming over here just looking at a few different items. I'm going to actually throw on real quick since I've got it pulled up right now. Folks, the good old Arun indicator that we discussed previously. And there it is. Yep. Very good. We've got it in place. I'm just going to go ahead and close it for now. We'll just leave it. I'm going to put it here for a moment. I think it's going to be a good and interesting reference for us to look at. But before we dive into that, what about just looking at the general markets? SPX just briefly here. We did actually just barely, and you can see this if you go to a 1 day, 1 minute chart. Well, shoot, I'll go to a 5 day, 5 minutes, fine. That right there, you were all here, folks. You were here. You witnessed it. That is an all-time high on the market. And we've been having a series of these highs, but that above 6,300 was an all-time high today. We did back off from that. You can see the market did ultimately reject those levels and we pulled back down. It'd be interesting to see what we get coming back here. There could be perhaps an extended level of support that continues to reside near this level, just below 6,200. Really, actually, probably closer to 6,100, really. And we've seen this kind of ebb and flow of 500 different stocks. Very, very common to rest on prior highs. Let's just count them. And that can happen. So we could be looking at this target over here. I mean, looking at this as a potential range. Now, we could get a pullback here. And so we're seeing an interesting basket of stocks that are making some gains today. Okay. Something that had been helping the markets, well, there was tech. Tech's been helping the markets. In fact, you can still see we haven't closed our gap yet on NDX. And a lot of that movement has been due to some of the big movers out there. I mean, NVIDIA still up $6. I mean, it gapped up much higher than that. AMD kind of leading the charge here. These could be perhaps interesting stocks that traders might look at down the road. We did not look at a flag here yet. We had kind of observed it a little bit, but we didn't get that flag trade. But this could be the beginnings of a longer term move, perhaps too. Notice over here on the weekly, we're just coming off these bottoms, and these semiconductors can really have these extended runs. So keep posted. We'll keep tabs on AMD. Something could be of interest around the corner. In terms of risks of the market, we're seeing potential risks right around the corner on a lot of stocks right there. Folks, earnings season really begins to kick in gear about mid-July. This is, for AMD, it happens to be August, but look at all of the earnings that we're getting over here. I'm just going to go to the calendar real quick. You can just see us starting to spike with the S&P. Now, last week was nothing like this week. I mean, last week we had 2 companies in the S&P, and this week, as you can see, a lot of financial stocks kick it off. This, I'm just going to state it, but there can be reward as well too. But we have to state, when earnings pops up and we've been at all-time high levels, sometimes markets are priced to perfection. And so earnings can really represent broad-based or systemic risk. That's risk across the market, but also non-systemic risk, because you could get individual stocks, the risks of individual stocks. Systemic risk being risk of the market, non-systemic risk being risks of individual companies. We got a lot of individual companies and a lot of things can happen. So keep that in the back of your mind as we look at these swing trades here. And one thing that traders oftentimes will do to help sort of negotiate through those risky periods of time, they might just simply do one of the most basic things of all. And that is to just reduce your position size due to a lot of potential volatility on the horizon around earnings, right? And that can determine a lot of what could happen in the markets too, collectively. So a lot of things, and by the way, also maybe some defined risk option trades, like some of the spreads that we do in this class as well. So some things to keep an eye on. Now, let's take a look at some of our existing companies out there. Caterpillar is still steady as she goes. We had an overwhelming response last week from our poll that said, hey, take my, we had 50 shares. Get a little delay on my drawing tool again, which really does affect my handwriting quality here. But we took off 25 and we sold it. So we are holding right now 25 still of Caterpillar, and it's done okay. It's I want to say, what are we about? Yeah, about 1,100 uh, paper, it's just in paper, just as a reference. Before we were about 12.6 or 12.2 or whatever, 12.3, excuse me, 2,300. But we sold a little bit last week and we kept the remaining portion on because we said we have not yet hit our full bull flag target. And you can see over here, this was the bull flag, right? This is the extension coming down. This is the flag pattern. We took the trade over in here somewhere. Let's just draw in blue now. And now we're waiting for this price range. You can see over here with the prices, this full price range, like 100%, like let's just write that in, 100% of this price range. We're looking for that 100% to extend off of this bottom and up here. And that is the level we're at. Now, what's interesting is we do reach this, I think it was near an all-time high, perhaps, it's certainly an annual high, around 420. Notice how close we are to that target. Probably just best if we set our 25 shares a target at that level. Perhaps, that'd be one way to do it because look at this. It isn't a high. You might bounce off it and come back down, or you could just simply sit with this trade. We also talked last week about putting some additional trades on, for potential exit level, prices moving below the 10-period moving average. Let's just pull it on right now. There's our 10 right there. We've got it saved. This is another way to trade the swing as it's been going in our favor. Oftentimes that means a lot of price volatility, and that's good volatility to the upside. That's what unfolded here. And so notice how prices have really been holding and not closing below the 10 DMA, the 10-day moving average. This is a way to kind of manage that trade. And it's very simple, but it can be very powerful. A lot of times the most simple indicators out there can be the most powerful. And that's just sticking with the trend, just sticking with it. That was fairly easy to do. And we just let it ride. Now we're waiting for maybe an exit up here, 420. Yeah, we did get above 400, which is a big resistance level, but very interesting. So just to finish up the point I was making here, that 10 DMA, if prices cross below the 10 DMA, that could be an exit point. But we also want to have maybe a target up top. Let's at least set the target in place. We'll just go ahead and put a sell stop limit order up there. Let's see, 420. 420, that's clearly above our range, but it's not quite the full target, right, of the trade itself. But it's getting darn close. It's closer really to, and you know what a lot of times you can do? You can choose something like this, watch. So 419, I don't know, 50. Sometimes if you notice, they don't quite get to 420. I don't know if we did get to 420 last time. We came dang close. But this is just below this level. So we're taking a fair amount of gain here in our paper money. And I've just set them both up. Sometimes there are things a little bit different on this demo account, but we don't want to, risk a larger gain over just some pennies at the end type thing, some of those round numbers. And so that's what we're looking at, stop limit at that level. Okay, rejected. Okay, so this is kind of funny. It's not available to borrow. This is just a message I'm getting. Let's just say we've got a target up at that level. That is a demo account issue right now, a paper money account issue. But you guys have an idea. I ran into this a little bit earlier as well. I was hoping we'd get it to go through, but that's that for CAT. Now, here is one a while ago. I've got to run through these. BWA. This is Borg Warner. 50 shares on this still. It is still unfolding. This one actually just continued to sort of climb higher. I do have a 10-period moving average in here, and we are just sitting right on the verge of that. We've already taken 50 shares off the table. We've got 50 shares left with Borg Warner here. And we're right at that level. It's still sort of flagging, so it still looks bullish, higher highs, higher lows. I will say that there is some resistance right at this 36. And so a stop, since we did break a little bit higher here, we touched some higher levels and made this low. I'm going to do this. I'm just going to pull our potential exit level. There's no guarantee that we'll get an exit right at that stop price. but it will, if it hits that level, it'll trigger. Well, I've already read those disclosures. You guys get an idea on that, but there's no guarantee it will exit at that particular stop level. All right, that we've designated there. But anyways, we're just going through the process. In fact, we've done this a few times. In fact, just as a quick reminder, if we were to see a stock, let's change the color here. Let's just make it like it's going, oh, well, anything blue. I only have a few colors to select here. But if prices are going up like this, and we're over here in time, once it makes a new high right here, and if our stop was here, if we did make a new high up top, well, then what we're going to do is we're simply just going to raise that stop to the next level as we break another high. As we break another high, we're going to raise the stop to this level until, so that's sort of a downside protective move. We've talked about other ways to manage that trade with shorter term moving averages, but this is another approach as well as we're waiting for a stock to maybe hit a target. All right, well, let's move on to our trade. So we only had really one trade that we actually got under our belt in last week's class. It was PTC, and we were using some of the Arun indications. And this is kind of an unusual one. You don't get this very often, but let's just go back a little bit and talk about what we reviewed initially. So we did say that on this particular stock, this PTC, there was a shoulder head, and we thought, hey, maybe over here, another shoulder. But what was interesting about it is we did make new highs right here. And so ultimately what was forming here for us was a bull flag pattern within this tech stock. Okay. It's actually it's an interesting company. That was a tech stock right there. This one had begun to break out. And what did we do? This is the trade we put on. We bought it right there at that level. At the 8th, let me just double check. I think last week, it was the 8th, right? I don't think that was for this class. We only had one in this class. Let's go to that monitor tab right now. I'm gonna go back in the last, just 10 days should do it. PTC. So PTC, we bought right there at 178, and it literally went to 199. We put it just below that 200 level. Hit it literally in the very next day. As you can see right there, it was on 7.9. Now this it's much more likely to hit a stop level than you are to hit a target, but we love it when it does something like that, right? When we're looking for an upside move. It did have a really parabolic move on some news. And what's interesting, I'm going to talk about this, when you look at this pattern, it already gives us some insight as to what might be happening with the company itself. There was strength. We were making new highs. Prices were running up, and we were not really giving back much of our gains. I mean, this was and we mentioned it, a very, very, very tight flag pattern. They call it a bull flat sometimes instead of a bull flag, because it gains all this price, but it doesn't really give too much back over here. These can be even, can I just highlight it with a big B? Even more bullish. They don't have to be, but they can be. It can be a sign of something that accumulation. It could be institutions buying, whatever the case might be. But it hit our target that we had, and it actually exceeded that target very quickly. So 179 to 29, it was 20 points. So that was $2,000 right there, right? Yeah, $2,000, 179 to 199. So about a 20-point move the very next day. Let me state this too. Not only did it hit a target in terms of the swing trade we were looking at, it looks kind of awkward because the swing trade notice the swing trade target's like over here, but it still measures this price range. So we were just saying off this low, that price range was approximately right there. We did say we're going to put it near that 200 level, big round number. Notice it gapped right back down to that number the very, very next day. So it was a good gain for the paper money account on some pretty good volume, and there could still be additional swing trades going forward. I want to mention this because if you guys, first of all, it hits a target, and that's one reason why you would get out anyways, right? It hits a target. But there's also a move out there in the market. It's referred to as a parabolic move. Anytime you see prices that go like 10 or 20 times the average. It's something like 5 to 10 or even 20 times the average price move. And you can see, look at the size of the bars over here relative to this bar. If you get something like that and it sticks out like a sore thumb on the chart and you can see it, a lot of times traders will exit on a parabolic move because a lot of times it prices everything into one bar. And generally, if the news is not fantastic the very next day, it got a little bit overheated and it will oftentimes open up roughly in the middle of the range, the 50% of the bar. So a parabolic bar, you might oftentimes get a 50% opening the very next day. So you're going to give back half of that. So that's why a lot of times traders will just take it off the table. Now we had a target that was already in place because we had an OCO bracket order. It took the trade, okay? But that is just, I wanted to pause just for a teaching moment because that truly, yeah. I'd like to keep my status as a coach that can draw, but when I start drawing like this, wait, and there's like a little delay. Notice that? There's a delay. It really pulls my status down quite a bit there. So there you go. All right. Lowers my status. All right, folks. Well, those are a couple that we were looking at. That one's out, but let's look at some for this week going forward. By the way, one quick thing that you'll notice over here on the SPX that was interesting as we talk about this, I wanted to blend in, some of our additional scenario setups that we use to kind of gauge momentum here, TTM squeeze, the Arun indicator, but also, what else can be helpful is if the market itself is making highs, which it is, and then with that too, how about the Golden Cross? What about the Golden Cross? I wish I could just type in Golden Cross. I can't. Okay, I could type in this though. I've got the 200 already. I can put a simple moving average in here. It's going to be the 50 and the 200 is what it's going to be. So the 50 down here, let's go ahead and put this guy down here at about a 4 or so. Let's go 3. Let's see what I mean. There's a method to my madness here in just a second, I'll note. I'm going to get the 200 day. No, I don't. That's the Bollinger Band. Sorry. Let's add one more in here. And I'm going to kill this one. We can keep the 10 on for now. Ooh. All right. Put the 200 in. This is how I could just make a quick adjustment there. The 200 day. So I've got blue lines. I've got green lines. We'll make this really thick for the larger moving average, the 200 day. And voila, there you go. What did we just have over here? We had a golden cross. Now, oftentimes what this can be an indication of is the possibility, this is why traders will use it, of an extended move to the upside. We talked a little bit about this last week, but the reason why I bring this up is because if the market's strong and we're dealing with 500 companies, well, it's logical to say that there may be a fair number of stocks out there too that are also breaking into what I refer to, a lot of traders would refer to as an intermediate. INT for short, that's a long word. Intermediate term trend. You've broken higher. In other words, there's an extended move in place here. The last time we had this, let me just go show you right here real quick. Let's go to a 2-year. See, we were this is interesting. This really has been in a longer term upward move. You can see this was all in a golden cross formation. It only said to get out here. Now there are other indications to get out, namely a break below the 200-day moving average. But just one more scoop and we're set. Let's just go to a 5. Ooh, let's see. Really? Yeah, max daily. Did I want to do that? I probably did just to show you. Does this look a little bit familiar? Look at these points on these pullbacks. Here's one. This goes all the way back to 2020. That was a long one. From the bounce, look at this. Bounce, golden cross. Bounce, golden cross. New highs, by the way. Bounce, golden cross. Right there, and the trend, and another bounce right there. So they can be interesting. There can be a lot of stocks out there that could fit into that category as well. All right, well, let's get into our trades today. There are some interesting ones to look at. Let's look at maybe some of where we've seen some core strength unfolding. Again, we have the risk of earnings just around the corner. We need to be mindful of that. I will state this, and this is kind of fun to do. It's interesting. It can be interesting. What happened on this earnings? Take a look. What happened after? Were prices going up or were they going down? What's been the trajectory of the last 3 or 4? Now, this one was kind of just flat on this earnings, but we've seen upward momentum clearly going higher. Now, that could, we don't know, but that could be a consideration here for something like a Netflix. Now, Netflix is very, very highly priced here, right? And this is sort of a flag pattern, as you can see, and it's been kind of a consistent little bit of a flag as we've broken higher, and it has shown some pretty good strength. If we really zoom in on this now, I'm going to zoom in and show you, where are we resting at? Oh, okay, so kind of right at those prior highs right there, the prior highs. Now, this is an interesting flag, but I wanted to just kind of do our first sort of example could be a flag sort of a setup. So what might we be looking at here for the flag? Well, a lot of times we might be looking at the close above the high, the low day. We could also be looking for that 10-period moving average, which we did. Oh, I had to, I refreshed it. Dang. Okay, I'm just going to save these on here next time. Simple moving average. Here's our 10-period. 10 or 9. They're very, very close. And 9 a little bit quicker than the 10. But there you go. What could be the signal? How about a cross above the 10-period moving average? But maybe, what about here? What about waiting until after earnings? Or could we look at an option trade, and so post earnings, unless there is a, maybe a defined risk trade, if it were to gap down lower, our loss is defined. I'm talking maybe something like a short put vertical trade where we're selling a put higher and buying one a little bit lower, right? To kind of to try to define that risk for us. So that could be interesting here. It's all still within the structure of a flag. I will have to say this too, that the RSI seems to be holding right above that 50% level. That's actually in a really, oftentimes these can be very, very strong points if that's a bottoming pattern right there. It hasn't hit yet. So in terms of stock, it's kind of expensive. So if we flip over to an option, what could happen after earnings? Well, they refer to it as a volatility crush. And so the value of that option could drop, but hey, that's a positive thing if we're selling options, right? If our core position, really the core driver of the spread itself is the short put, there's more credit, there's a higher credit than there is a debit on buying the put, that could work for us. Now, it's a shorter term trade. This could be a short term possible bounce trade. It's also a play on earnings too. Don't forget that it's a play on earnings. So, this is an example trade, but if somebody was not confident in earnings, that would be obviously a trade that wouldn't be of interest to them. By the way, lots of money flow in here, positive money flow. Remember that indicator? Nothing's 100%, but it is giving us signs that we are seeing buyers as prices continue to go higher. That's a positive. All else equal. That's a real positive there. Okay. So let's see. Beth, so Beth says, does the downward sloping RSI now overbought? Let's see. I love this point that Beth brings up, you guys. This is one thing that traders took me a long time to kind of learn, but one thing with the RSI, and it was actually one of the first think scripts that I had written was this, is that if a lot of traders will look for prices to hold above the 50 or at least the 40 RSI on a pullback. So in the direction of the trend going higher, if it's 40 to 50, that is actually quite a positive. It's a different way to use that RSI. You're truly using it as a momentum sort of a gauge here. But I really love that question because actually when I looked at that, that was really actually quite positive. And actually up here at 60, it's incredibly positive. I mean, these were 60s right through there, but 40, it should hold very near 40. Notice over here on this pullback right there, Beth and everybody, it held just above 40. It doesn't have to. This one held right about 50. So I'm talking about the flag and then a pullback to an RSI 40 to 50 range. Okay. Thanks for throwing that out there. I wanted to address that because it's just right in. A lot of times we're thinking about overbought, oversold, and that is a way to use the RSI, but this is a little bit different. Yeah, so good catch. Let's go ahead and take a look at our trades over here on a shorter term basis. Now, you can see that we do have a few of these here, and wow, I mean, this 10-day period is very short term. You got to realize, but the values are going to be really, really quite high here. And that's because there is a lot of implied volatility, folks, right there. It's almost 60 on that Vega, right? And every 1% change, a 1% increase in the Vega, for example, would increase 1% increase in the implied volatility would increase the option, this range over here, by the amount of the Vega. So you can see what would happen if after earnings we dip. Now, this is just going to be a good example here on Netflix. It's an interesting flag. There's a lot of volatility tied into it. I am going to throw out here implied volatility so you can just get a general sense. We're just going to take a little slight, a different direction just so you can see it from the option perspective here. What happens post earnings? Well, you can see over here, post earnings here. Well, this one really dropped pretty substantially. It was about at, I'm looking at this range and using implied volatility right there. Where are your earnings? Yeah. So as an example, this was about 45, and the very next day, implied volatility dropped to about 25 or so. So it's about 20, a drop of implied volatility of about 20. Now, if that were to happen over here, that could really smash that short put portion of the short put vertical. Okay. And so notice, because every percent decrease in implied volatility could drop that option by the amount of the Vega. And if we're talking, let's just say if that last example of earnings, for example, was reflective of what we might be seeing in the future, that could drop it in half. Imagine, I mean, 82 times 20, 0.82 times 20, that's plenty right there, right? That's a little bit. That's just a little bit of a move all by itself. Now, we are conjecturing, but we're using a little bit of that guide to kind of help us out a little bit, right? Say 0.82. I'm just using one of these near the money, right? Or close to at the money options times 20. That's 16.4, just the implied volatility itself. Just the drop in implied volatility, the impact that Vega would have on that option as an example. Okay. Now, I want to talk about the delta real quick. The delta, first of all, the delta is measured based upon a $1 increase in the underlying stock. If that goes up $1, then the option would move by the amount of the Vega, the amount of the delta. And you can see over here, you know, that might be a 0.41 or lower as we go down through here. You can see how that could move. I mean, that would be, so if this were to jump up 20 points, well, that's a pretty big impact. On the downside, that's a minus delta that could also impact it, right? It's also short term. This is a 10-day option. And what are we looking at over here? Theta. The theta decay, each and every day, it's decaying about $2.34. Now, a lot of traders will capture this range. I didn't even go all the way down to 20, but I'm going to, though, right now. Between a 20 and 40 option. So I'm going to put in a few more. Let's see, 25 should do it. No, I'm sorry. Let's do more. 35 is what I meant to do. Yeah. 22 all the way down here. So between a 20 and 40, another way to use this delta is that'd be the expectation in terms of a percent that a trader would have of it going below. Like right now, they say there's only a 41% expectation that prices will go below 1240 by expiration. And so really between that 20 and 40 range is what they're looking for. 20 to 40. Come on, there we go, 20 to 40 range. So there might be quite a bit of implied volatility in here if we were expecting this bull flag to unfold correctly. Okay, so let's just look at the chart here too real quick and just say, you know, what about, let's say, for example, what does the 1200 show us over here? The 1200, wow, that's right around 30, a 30 delta. Now, if we wanted to, let's say, for example, I'm using that because it's kind of a big round number, right? And there was some support at this level. So we're kind of going to risk maybe, let's just see what a 5 wide can give us up here. Because if we're just selling the option by itself, look at the margin requirement, $20,000 to try to generate this. Now, I realize if you just buy the 1195, it's a $1.52 credit. $1.52. Now, there's only, according to the way some traders would use this, a 29% expectation that prices would go below there, and that could be captured fairly quickly. Let me just show you there. Now, that's not 19,000 in terms of the buying power requirement. It's 348. Let's just do a couple here. This is going to be a very short-term trade. I wanted to mix things up a little bit this week with earnings coming up, and I'm going to do 2 contracts so that the credit here is over a shorter period of time is 304, and the risk on this, the max loss, is about 696. Okay, so we'll go ahead and just put this guy in right there at that level. So a little bit interesting. It didn't do the stock trade ahead of earnings. We took something in terms of an option where we try to define that risk because there are earnings there. Short term, we'll see how this pans out. But we sold a put here, so minus put, and then just below it at that 11.95, we bought a put. Okay, all inside of the potential bull flag and strength to the upside because we did not see a cross above the 10-period moving average yet, but a good strong trend to the upside. Okay, so just stepping out of our comfort zone for a little bit. Okay, let's continue. So what about other areas that have been moving? In fact, if we come over here and we look at the markets and sectors review real quick. Oh, not that one. Wrong one. Sector grid. I do that in my markets and sectors class tomorrow. But where we have seen some of the strength, now it's not gold that's been going down today, but materials have really kicked into high gear here. And if we did see a pullback in infotech, let's say the market did come back and test those prior highs at support on the NASDAQ or the S&P or whatever the case might be. Just for a little bit, it might consolidate for a period of time. Another area that can move is gold-related stocks specifically. In fact, let's look at gold right now. I want to highlight this here for you. Here is gold. So /GC right there. What do you see with gold? Gold's been in a long sideways channel. Now, one of these companies within gold has really made up within gold itself, the gold miners, I should say, has really made up the market share of gains amongst a lot of the companies out there, namely because they operate in the U.S. I've seen companies operate outside the U.S., these gold miners. Boy, when the price of gold goes up, in a lot of cases, the pirates come in, right, when you don't have a strong government. Not the case here. And so AEM, we'll pull that up in a second, but look at this. See this higher high and higher low as you're getting towards the end of a kind of like a triangle pattern. Sometimes that could be helpful if there is a rotation. AEM, let's pull it up right now. Let's look at it. AEM, Agnico Eagle Mines. Can you see even a potential flag pattern here? We had traded this stock previously. We did a swing trade type move on it. I'm going to take this one off for now because it doesn't really apply anymore. Remove that drawing and this one as well. But we'll keep hitting these over and over again, sometimes as they are unfolding, because the trend is still up. That's one real key too when you're looking at a stock. If there's something that you like and you understand the company and the trend is still going higher, you can maybe play the swing trade a few times instead of just one time. So never just toss the stock out once it's done necessarily, especially if you've put the time in to understand that company as well. Look over here with me. That's a sideways channel, but look at this ascending triangle there. How about that for a line? It's okay, but you could see where we're getting, and we're just kind of holding these higher lows. There is earnings down here, so there is a little bit of a risk factor. We're going to do an early entry on just 50 shares here today. Let me take, I had this set up because I do want to know when we break above these highs as well. I have an alert in place. There we go. Boom. But we're going to do 50 shares here because we're holding the range and maybe we want to try to get a low level still. Technically, yesterday, we broke above this high. I'm going to really zoom in now. At this consolidation coming through here. Look at this. Right through there. Just a little, a consolidation range right in there. We actually broke above the high here. If I would just draw it right, I'm going to draw it right this time. There you go. We did break it. We're still kind of holding below it, but maybe some traders would say maybe that's enough to start a position. because it's holding big picture. Now, we had looked too, take these off just for now, at the TTM, because the TTM squeeze will oftentimes give us an understanding of prices that are kind of holding into a particular range. So we'll take these guys out. We just want the squeeze. We don't want the histogram. We'll just look at this. Sorry, let me get the other one. I'm getting confused here. There we go. Notice what we're getting here. This is when the Bollinger Band fits inside the Keltner channel. See that sideways action? It's a price compression. And traders will look at this for the possibility of a breakout, up or down. It doesn't really tell us, but we can use the trend as a guide. So now we're looking at AEM for the possibility of that. And by the way, it's been there for a while. In fact, where are we at on this? Yeah, it's been holding for, wow, 13 days already. That shows really, really, it could be a reference in terms of low price volatility or price compression, because we are waiting for, actually, yeah, the Bollinger Band to fit inside that Keltner channel. So let's do this. I'm going to go over here into the trade tab. Let's start it off with a 50 shares setup first. I'm going to put the stop right below, maybe about 114. Do you see this low point here? So we're really anticipating it moving. The target, though, could be just simply a flag pattern here, coming up higher, like that. So I'm going to go about I'm just going to put some broad numbers in here initially, but about 135 and 113. Right click, buy custom OCL bracket. Everything's going to be a GTC down here because, first of all, we don't want our stop orders to be falling off at the end of the day. That's not what we're after. This is about what did we say? 135 to the upside and 113 to the downside. I'm sorry. I got that wrong. Let me just jump back. Real easy to take a look at. Yeah, it was 113 and it was right. Okay. 135, 113. Boom. Confirm. Not yet. We got to put this to 50. So half the contract. Let's link these up so that our stops match that. Confirm one time. Take a look at the dialog box and see what we're after. And click on send. There we go. 50 shares. Now, there are a couple more I want to show you, folks. If you're getting value from this presentation, these broadcasts, hit that like button. It lets me know that you value the presentation, and also subscribe as well. Would appreciate that. It's always great to have you guys on board. Let's hit a couple more, though, while we're at this. Okay, I didn't see, by the way, did we get a survey today, Cam? I don't think we did get a survey today. No, I think we're in the clear there. No surveys today. Really 2 questions anyways, but hey, saves us even more time. All right, let's do this. Some other ones that may be in the process and something we can look at this week. Micron pulling back here in sort of an interesting maybe flag pattern. We did just make a new low, but keeping tabs on Micron. As a matter of fact, what about a pullback right here, a trend line? I'm going to right click. Folks, I'm going to scoot on down and just say, create an alert with that drawing. At or above the trend line. That was all with a right click, by the way. Breakout could be of interest. That was a really, really strong move, and we might be resting near prior highs over here as well. So that's something to kind of keep in mind as you go through this for sure. Does it break above that level? Does it get us started? One of the real nice things is we did get past earnings here. Okay, what did we just barely move into here? The TTM. We got into a tighter range right there, as you guys can see. Okay, so pretty tight actually as we moved into it. Now, we did talk about last week, we went into more detail. We're going to keep bringing up like the Arun oscillator. In fact, we had like say, for example, TSCO. You can take a look at last week's presentation if you're interested in doing so. But we broke out of the TTM, but did we see extra strong indications of strength according to the Arun indicator? Let's pull it up right now. TSCO. We don't want to forget about this. That's why I'm still hitting this, right? I'm going to take out, I got the up, down, Yeah, that's fine. Perfect. We're just going to leave it just like that. And there you go. Look over here with me. We just took out a huge range here that we've been consolidating for a very long period of time. So trying to see the strength of this trend, a rune at those highs. And what do we have on the downside? At the bottom too. So this could be really an indication, actually, of core strength of the trend, according to the Arun, because it's giving us the highest read. Really, kind of a rare read when you get the high at the top and at the bottom. We talked about this last week, folks. You can, if you want to, take a look at this class right here. We've got a bunch of playlists in here. We've got. I'm just going to pull this up over here so you have it. If you want to take a look at what we discussed last week, here is the playlist actually for this class. The very top one, if you want to select it, you can see it right there. And if I go to the ThinkScript class, I was thinking about you guys when I did this. Here is the ThinkScript class, and this is the one I created. Right there. The Arun indicator of full power, and this will use the stock hacker to find that for you. And that's behind a lot. Actually, a lot of the trades that we look at in this class is just using this tool here. So if you want to take a look at that, that's the playlist. It's just the one at the very top, just last week's discussion. It got posted a little bit late, and so I wanted to put that out there for you guys. All right. Well, there you have it, folks. It's great being with you. Look forward to it each and every week. Looked at a few stocks out there. Thank you, Cam, so much for your help in the chat. Everybody have a fantastic rest of the day. We'll see you next time.